Folks, Dan Frio here, the Mortgage Update. Today is August 17th, 2020. So what I want to go over next is the reason why you're here is what's going on with mortgage rates for the day, what's going to happen this week. And I got some great news. Yahoo Finance actually found me, and they posted a quote that I quoted last week. And believe it or not, it's not pigs get fat, hogs get slaughtered. So don't go away. I'm going to show you what it is. Stay tuned. Okay, I got some pretty cool news today. I had a former client email me an article in Yahoo Finance, and I was quoted. And it wasn't pigs get fat, hogs get slaughtered. It's basically the quote I came out with last week in regards to when that one mortgage lender came out and said, "Oh, we're doing rates at 1.99%." It's not illegal for them to do that. Let me come out and say that. They didn't do anything wrong, really. But you know, the charge on that particular loan was like $11,000. I got a lot of comments back saying, "Hey, well, does it make sense though to pay the $11,000 and maybe have a lower payment and so forth?" Yeah, maybe. But you got to break down the numbers, and that's where I can help you. If you want to spend $11,000 or $15,000 or $20,000 to get rates like that, I'd love to help you. It's nothing that I would recommend in almost every case because studies have shown over the last 30 years that the average loan is outstanding between 5 and 7 years. So do you want to spend $11,000 or $12,000 or $15,000? Again, that $11,000 that they came up with, that was only the finance fee. That wasn't all the other fees. And depending on where you live, for example, some states, just the title fees or the legal fees behind things, nothing from me, no charge from me. It's title work that you have to get when you get a loan, and I can go through that in another video. Is it might be $2,000 or $3,000. So you have $11,000 in finance fees. You have another probably $1,000 or $2,000 in lender fees. Then you have title fees of $2,000 or $3,000. I mean, you'd be looking in maybe in the tune of $20,000. Are you going to recover that in 5 or 7 years? Probably not. So that's why I said that. But here's the article. It was pretty cool to see this. I was quoted in there. If you go to Yahoo Finance or just look up Dan Frio Yahoo Finance, you're going to see this. It says lender announces 30-year home loans under 3%. And you go down, you scroll down, you're going to get to about here, and then you're going to have to click, and it'll say show more. You show a little bit more, and it comes down here, right here. This is kind of neat. And what I said last week was, here, I'll just read this to you. With a 1.999 30-year fixed rate, there has to be some kind of catch, says me, Dan Frio, preferred rate. He says it reminds him of when he would be driving down the street, and then here's what I actually said. And I say this a lot, actually. You see a gas station, you're like, holy moly, the gas is 50 cents cheaper there than anywhere else. Well, there's a catch behind it. You have to buy 4 pizzas, a car wash, and get a case of beer. So that's what I captioned, and they caught it right on here on Yahoo Finance. So that was kind of cool to see. The good news about this is I think this got picked up by some other news organizations because we got over 30 applications today, just today. So thank you guys for reaching out. So why are you here though? Basically, you're here because of this right here. So anybody new to the channel, what do we follow, or why do people follow me? That's the first thing. So what I'll say is, what I try to do on my side of the fence is give you unbiased information. I'm providing you the information, and you are the judge. You're the boss. You determine on what you want to do. I'm not pushy. I'll give you the facts behind things. Sometimes there's lenders out there that can beat me. 9 times out of 10, we can beat the other investors. And I won't throw you a curveball. I'm not going to promise you one thing and then at the end say, you know what, I wasn't able to do that. But I can get you that rate still, but it'll cost you $5,000 more. I'm not going to do that. I can promise you that. Okay. So that's the forefront. I pull the curtains back on Tuesdays. I show you my rates compared to any and all rates I can find on the internet. So if you have a lender that posts rates, please send it. Put it down in the description below. Email me. I'll give you all my information at the end. I'll compare my rates to theirs. The winner wins. Whoever has the lowest rate. But don't be wowed. What I always tell people is don't be wowed over the rate. For example, this article here, if you're wowed over that rate, you don't realize that you're spending $11,000 in just finance fees. So you might be in the tune of $15,000 to $18,000 to get this loan. That's crazy. Okay, so let's get on to why people come to the channel. The main reason is the information I can provide you of, what happened today and with rates, what's happening in the next couple of days, weeks, months, and so forth. And I'll give you my educated opinions on this, as well as a lot of the economics that I follow behind this, the people that I follow, and the trends. I spend thousands and thousands of dollars subscribing to all these sites, and I do this all day, every day. So, what is this number here? Why do we watch this number here? Well, that is the price of mortgage bonds. They're called mortgage-backed securities. I'll give you two things just to remember. Green is good. That means the price is going up. You're getting a better rate. Rate's going down. So green is good, means rates are getting better. Red is bad. That means rates are getting worse. And worse to everybody is they're getting higher. So we follow this number right here. So the biggest thing that I say so a lot, and I apologize. The biggest thing we follow on this, I follow the trends. And here's what I mean by the trends. There's a lot of lines on here, and I'll explain those. But what I'd like you to do is please subscribe down below, follow me, click the bell. So every day when I post, you kind of get a feel for what's going on in the markets. Realtors follow me. Mortgage people, believe it or not, mortgage professionals follow me and reach out to me all the time. Realtors are posting a lot of my information and my YouTube videos on their monthly newsletters to inform their clients on what's going on with rates and price comparisons, how to figure out your mortgage payments and all that other stuff. But let's get on to the technicals that we follow here. Okay, you're going to see lines all over the place. This grid here is what's happening with mortgage-backed security prices. We love when the prices go up. That's this, we love the upticks. Think of it as stock. As the stock's going up, you're making more money. As this goes up, your payments are going down. Easier way to figure it out. Red's bad. Look at this. We got clobbered here. Okay, we got clobbered here. I locked everybody right in this range here within the last week and a half. If you weren't, you were locked right into here. Okay, because this was kind of we're in a little bit of, I won't say scary times. Rates they're stupid low, but I was seeing we're starting to hit resilience or resistance levels through here. So let me go through these lines. This line here we'll call this the ceiling. And we're going to call this right now a short-term floor. All right. So think of these as bumpers. And I know for those that watch me every day, you probably get sick of this, or you might laugh. You take your kids to the bowling alley, and if you didn't put bumpers on, they would fly. The ball would fly all over the place. So we put in these bumpers, and in a real world, or in a normal economy or world, the price of these things or the bonds, they're going to kind of trend in this line here. They're going to bounce around and be, then they'll stabilize and whatever. So they're going to stay in this range here. We're in uncertain times. So there's also another floor that is here. Okay. And we're bouncing around in these areas. Before, there was a floor right here. And if I put this in there, you're going to see some resilience levels. And then when we broke it, what happened? So right here, we were hitting a resilience line here, a resilience line here. We hit it here, and then this scared me. I'm like, you know what? We keep hitting it, coming off, hitting it, coming off. So what I did is I locked in a huge majority of our clients right in this range, and that was perfect timing. We went down into these ranges here. Then all of a sudden, Corona 2 started, and then the Fed stepped in and started, doing some additional things. They went from buying about $3 billion a day in mortgage-backed securities to stabilize the prices to $6 billion right through here. That increased the demand for the bonds with the same amount of supply, so that jacked up the prices. And then we had a new run. Then that run came up to here, and this has been a resilience line kind of ever since, to a point. We hit it, we stopped. We hit it, we stopped. We hit it, exceeded it, came back down and closed at the level, and then we hit it, and I'm like, you know what, lock everybody. So I put out a lock order right here for my whole team. If you got them, lock them. And then we came back, and then we crashed. So if you weren't locked here, you were locked here. All right. So now what we're seeing is there's other lines in here, and there's a line here, there's a line here, and there's a line right here. These are moving averages. What you do is you blend these numbers around and you get averages. A 25-day moving average, a 50-day moving average, a 100-day moving average. That's as far as out as we're going to go. There's reasons for all this. There's technicals behind all of this. There's technicals behind the bond prices, stock prices. Everything has its trends, its peaks, valleys, and these are things that we watch. We're like, okay, once it gets to this point, it's overbought. Once it gets to this point, it's oversold. So we know kind of when to buy and trade and do all these other things. So now these are starting to play interesting roles in this as well. Look at right here. And here, and here. Now we're starting to create another floor right here. And that's where I see us being in the short run. So I think I predicted, if you don't believe me, go back to here. I didn't predict it. I said where we should be is right in this range here. And we pulled back into that range really quick, basically in a day or two. So now we're in the levels that I like. I'm comfortable with everybody right here. What I'm starting to monitor is there's a bunch of data coming out, and I'm going to show you that right here. Citibank just came out with they have a pandemic. Believe it or not, they have a pandemic study, and it says if the number is certain, if it's this high, then we're going to have pullback in the market and all this other stuff. So basically, in a nutshell, the Citibank data came out. And the panic level or the euphoria level is 0.91. Okay. What that's saying is we have an 80% probability that stocks are going to retreat. It's a pretty big probability, but it says it's going to retreat in the next 12 months. Well, we have Corona 2 right now. We have unemployment that's nuts. We have an election coming up. What I'm thinking is with the bashing of the right versus the left and everything else, what I'm saying in a medium term, little longer than maybe a month out, but within 3 to 4 months, we're going to see a dip in the markets, the stock market. Stock market's basically hitting a record, or we're at a record high almost every day. We're just teetering it or going past it a point or two. GDP focuses on, or is a number based on the productivity of the manufacturers in America. You have GDP right now that's down 30-something%. That's a terrible number. You have unemployment. The true unemployment rate's probably 16 to 19%. Terrible number. How is the Dow and the NASDAQ daily hitting record highs or teetering on record highs? Kind of scary. So don't think that it's like when people were buying homes back in 2005, 6, and 7, it's like I can buy a house and a month later it's worth $100,000 more. That's not the true number. That's not real numbers. There is no rate of return in the markets that can consistently give you those returns. The average return on a house is usually 4, 6, 8% a year. Same thing with stocks and everything. So when you're starting to double your money every 2 years, something's a little overblown. And that's kind of what I want to make a point of here. So I think the stock market's a little hefty in price. What I'm seeing in the midterm is a pullback in the stock market. Okay. Let's say you have two components to invest, because most people don't sit in cash. They're either in bonds or in stocks. So with this euphoria level so high and probably an 80% probability that stocks are going to decline, people should start taking some money off the table. What are they going to do with it? They're not going to sit in cash or in a checking account, because you get 0%. The inflation rates say 1 or 2. So you're actually losing purchasing power every year. So you put it into bonds. You can put it into mortgage-backed securities, okay? Because you'll get a rate of return that can beat your savings account or checking account or whatever, because you don't want to sit in cash. So as more money pushes in here, again, it's like what the Fed's doing. It's pushing up demand, pushing up prices. You push up prices, you drive down yields. So I can see potentially when we have this pullback in stocks that we can teeter back into this range here. But I think this is going to be, and we'll know 3, 4, 5 years from now if this is going to be our bottom. But I think we've hit bottom. And I don't think rates are going to go any lower than this. That's what I'm predicting, unless we have a catastrophic corona pandemic, round 2 or 2.5 or 3, and the world shuts down again because of it. And that's possible, especially with flu season, not that far off. So that's my short to midterm range in what's going to happen with bonds and stocks and mortgage rates. Long term, say a year or two, I can say we'll probably be steady in this range here. So we'll probably be in, right now we're in the high 2s on 30-year fixeds. I can see that we're in the low 3s on 30-year fixed. So if you're looking to do something now, I would do it now. I still have people every day that come out and they have rates between 4.5% and 6% rates. Guys, don't be afraid of possibly getting turned down, getting bad news. Please just look into it. Let's try. The worst thing is I come back to you and say, you know what? There's nothing I can do right now, but let's put you on a game plan to get you into something, maybe, to get you out of that higher rate that you're into. But the worst case scenario, if you can put bread on the table, put a roof over your family's head, God bless you. That's life ain't all that bad. Economic calendar for the week. This is also plays a role in what's going to happen, say possibly this week. Is there's not a lot of information that came out today. The manufacturing numbers were not very good. But the stock market still, had an okay day, minus 86. Take it, especially with the numbers coming out. Housing starts are coming out tomorrow, and permits. This is going to tell us what's going on there. I tell you what, builders, their confidence level right now is out the roof. Their confidence level right now teeters on the best it's ever been. Well, not ever been. The best it's been since 1998. And that's builder confidence. So they're saying, with rates the way they are, the economy the way that's going, even we have a terrible economy, and they've almost set a record on builder confidence. It's the best it's ever been since 1998. So a long time ago. That's that piece of it. FOMC, this is the Federal Reserve. They're going to come out with their information from what happened last month and, kind of drill it down in they type it out and it gets read and it gets posted and analyzed and everything. I don't think we're going to see anything there that's really going to change things. I don't think the housing starts are going to change anything. And then jobless claims are starting to come in. With what the Fed's going to do, or what they're proposing to do with the unemployment, dropping the unemployment benefits from $600 to maybe $400 a week, that's probably going to push more and more people back to work because a lot of people are making, and I don't mean to get political, but I was with my nephews over the weekend and we were kind of going through because there's a couple people in our family that's not working, and we figured out their income of staying at home, and it was in the tune of like over $50,000 between unemployment and some other things that they get. So a lot of people might not be going back to work because of that. I'm not to say. I'm just saying that the numbers that we looked at and a couple of the ones we analyzed, that's what it came out to be. So good or bad, indifferent. I don't get political on the channel. I'm not going right or left. I'm just telling you what the facts are. So I think a lot of people, a good portion of people weren't going back to work because they were getting good compensation staying home. So that's that part of things. The stock market, let's see what the CNBC has. Here's what's happening in stock on Monday. I don't really think there was a lot that came out today on this. There's also the virus. They're coming up with if there's a cure to the coronavirus, that could really help things. And that's what happened right in here. If you remember, Putin came in and said, I might have a cure for this thing. And then all of a sudden this dropped off the roof. So I said, pigs get flat, hogs get slaughtered. Let's not look a gift horse in the mouth. That's why we locked in a lot of people right here. And then if you'd like to see the article that was written about me, or at least I was commented in, just Google Yahoo Finance or Yahoo News, Dan Frio. My name is Dan Frio, and you're going to find it right here. And again, I'm not bashing UWM. I'm just saying, they're giving you the facts. They're telling you right up front, here's your costs and everything. And that's a lot of money to spend to refinance. So I'd love to help you if you're especially looking at going this route. I'd love to help you and compare the numbers and see, where it fits for you. So that's it for today. That's the rate update with Dan Frio. If you'd like to find out more about me, just go to my website, therateupdate.com. Here's a number right here where you can call and reach me personally. It's 844-775-LOAN. That's 844-775-5626. My name is Dan Frio. So you can reach me via email at D for Dan Frio, which is Frio, at preferredrate.com. Those are ways to get me your information, or if you want to get the ball rolling and want to see what we can do for you to get you pre-approved for a home or what refinancing numbers look like, just click here. If you want to put a full application in, click here and you'll be on your way to an application. So that is it for today. I hope you like what you saw. If you would, my whole goal this month is to get to 10,000 subscribers by the end of the month. Only you guys can help me get there. So I'd greatly appreciate it if you would. Please subscribe down below. Click the bell. And I try to put on my titles a good title name, not misleading you. So if you see a title that you think is interesting, please go ahead and watch. If it's something there that like a reverse mortgage I posted the other day, not everybody's looking for a reverse mortgage. Don't watch it. So just skip through it. So that's it for today. If I can be of any help, please reach out to us. If you're in the mortgage process right now and you want to see what I can do for you, send me a quote that you've already have. It might be what's called a loan estimate, a fee sheet, a fee worksheet. Send it over to me and say, hey, Dan, take a look at this. Can you do any better, or am I in a good position? I'll honestly respond back and saying, you know what, they beat me, or you know what, I can beat them on rate and I can beat them on fees. It's a no-brainer. Let's get this thing rolling. So God bless. Thanks a lot. Sorry it was so long video today, but I'll be back again tomorrow. Same time, same place. Take care. I will see you then. Bye-bye.